There's an old saying amongst the uber wealthy. Please always remember this. New money talks very loudly. New money is always the loudest person in the room. But wealth, true wealth, intelligent wealth, whispers and seeks not to be in the limelight. Once again, new money talks and speaks loudly. Wealth whispers. Now, let's look at what the uber wealthy are doing, as we see now what others see eventually. Let not your heart be troubled. There will be additional pandemics that will hit the shores of the United States. And while you may not want to hear it, given we're still in the global grip of COVID-19, it must be said, more pandemics are coming to the shores of the U.S. of A. Now, how much they will impact our day-to-day lives remains to be seen. But our current pandemic has shown traders and investors the importance of diversified exposure to the healthcare sector. Positive vaccine news over the past several months has significantly improved the outlook for an adjustment to a new normalcy and returned significant shareholder gains in many stocks. Over the past year, the Dow Jones U.S. Healthcare Index is up over 36%. Now, our country, in and of itself, spends about 17% of the gross domestic product, talking about that GDP, on healthcare. One of the highest numbers worldwide. We need to monetize that and get P.A.I.D. from that. Now, the industry umbrella covers major pharmaceutical companies, smaller biotech firms, equipment manufacturers, telehealth businesses, healthcare providers, medical insurers, and hospitals. So at this particular time, I want to submit to you seven healthcare stocks that you may want to consider for possible inclusion to your portfolio upon completion of the appropriate drill down to get your P.A.I.D. as the next pandemic is looming to come to the shores of the U.S. of A. Given the devastating effects of the pandemic on personal lives and the economy, you, me, we, the beloved ASK THE WIZ Wall Street family, we can expect medical stocks to receive significant attention in the new decade as researchers and companies prepare for future pandemics. Let me start out with the first stock, in no particular order, Danaher, symbol DHR. 52-week range is $119.60 to $248.86. Now, this particular company manufactures scientific instruments and consumables in 4 segments. Those segments are life sciences, diagnostics, environmental, and applied solutions. Now, the company has been growing both organically and through acquisitions. In late 2019, Danaher separated its dental business through an initial public offering. That new company trades as Invista under the symbol NVST. Write that down. Then, in early 2020, it acquired General Electric's biopharma segment, Cytiva, spelled C-Y-T-I-V-A. Now, along with Fortive, symbol FTV, it is now expected to make a joint bid for the British engineering group Renishaw. Now, Danaher released Q4 2020 financials at the end of January of this year, and revenue increased 39% year over year to $6.8 billion. Bottom line of $1.2 billion was an increase of 55% year over year, and non-GAAP adjusted diluted EPS, that's earnings per share, for Q4 2020 were $2.08, a 62.5% year over year increase. Free cash flows from continuing operations was $5.4 billion. Family members, over the past year, DHR stock is up over 59%. Forward PE and PS ratios of 29.50 and 7.13 indicate an overstretched valuation level. A potential decline towards the $210 level would improve the margin of safety. But in the long run, the company will benefit from higher demand for more medical and industrial products worldwide. Danaher, symbol DHR. Next position of the several positions I want to give you is an ETF, a macro position. Now, the ETF's name is ETFMG, Treatments, Testing, and Advancements. It trades under the symbol GERM, GERM. 52-week range, $23.80 to $44.69. Now, investing in the healthcare sector via an exchange-traded fund provides exposure to scientific development without needing to monitor the fast-paced pipeline of each company. This particular fund, once again symbol GERM, is made up of biopharmaceutical businesses developing cures and vaccines as well as diagnostic technology against infectious diseases. Now, GERM began trading in June of last year, and assets under management stand at a mere $55 million. It currently has 77 holdings, and the top 10 names comprise close to 45% of the fund. Life Sciences Group, Laboratory Corporation of America, symbol LH, and Biorad Laboratory, symbol BIO, whose vaccines are currently being used worldwide, are among the leading names in the ETF, as well as Moderna, symbol mRNA, and BioNTech, symbol BNTX. Now, year to date, the fund is up more than 10% and hit a record high in February of this year. In the past 9 months, GERM short-term fortunes have ebbed and flowed with vaccine news headlines, especially as companies approach the final stages of clinical trials and receive approvals by national authorities. Family members, the thematic nature of this fund might appeal to you, me, we, the beloved Assel's Well Astute family, who want to prepare their portfolios for the next pandemic. Family members, ETFMG, Treatments, Testing, and Advancements, ETF symbol GERM. Next position I want to give you is Gilead Sciences, symbol GILD. 52-week range, $56.56 to $85.79. Let me break it down. Symbol GILD for you. Biopharma Group Gilead Sciences developed therapies for HIV, cancer, and viral hepatitis diseases. It has also played a central role in the COVID-19 pandemic, as Vocalory, Gilead's brand name Remdesivir product, has treated a large number of hospitalized patients. The company has a market capitalization of more than $80 billion. Now, GILD's Q4 metrics show that the revenues increased by 26% year over year to $7.42 billion, catalyzed or pushed forward by Valkyrie sales, or that Remdesivir sales. Non-GAAP net income almost doubled to $2.8 billion. Diluted EPS went up from $1.10 in Q4 2019 to $2.19 in the fourth quarter of 2020. At the end of December 2020, Gilead had $7.9 billion on hand in cash and equivalents. Now, family members, we must make sure that we monitor this particular company very, very closely, because it has a pharmaceutical entry into HIV drugs and various other illnesses that are out there that they are doing massive research upon. Gilead's forward PE and PS ratio stand at 8.97 and 3.3 respectively. And with this broad range of commercial therapies, robust pipeline, strong cash flow, and juicy dividend yield, this company easily belongs in our portfolio upon completion of the appropriate drill down. And like I failed to mention, but I need to remind you, Gilead Sciences, symbol GILD, pays a dividend yield of 4.35%. Dividend yield of 4.35%. Next position I want to give you is another ETF that you want to consider to get P.A.I.D. from the healthcare arena. The name of the ETF is Healthcare Select Sector Spider Fund, symbol XLV. XLV, 52-week range, $82.01 to $118.99. That's $82.01 to $118.99. Now, this particular ETF, talking about that XLV, gives you, me, we, the beloved Assel's Well Astute family, access to businesses in the pharmaceuticals, biotechnology, healthcare equipment, and services arena. And since its inception in December of 1998, assets under management has grown to $24.3 billion. XLV currently has 63 holdings, and the top 10 make up close to half of the fund. Among those leading the names of the top 10 holdings in XLV include Johnson & Johnson, symbol J&J, United Health, symbol UNH, Abbott Laboratories, symbol ABT, Merck, symbol MRK, AbbVie, symbol ABBV, and Thermo Fisher Scientific, symbol TMO. Now, this top-heavy fund invests in some of the large caps in the S&P 500 index, and many of these businesses have strong qualities including robust balance sheets, innovation, and strong management. Now, the sector allocation is divided into pharmaceuticals, 28.27%, healthcare equipment and supplies, 27.66%, healthcare providers and services, 20.89%, and biotechnology, 13.95%, and others. Over the past 12 months, XLV has returned over 34%. The fund's trailing PE and PB ratios stand at 16.26 and 4.17, respectively. Now, given the recent volatility and profit-taking in broader markets, a decline towards or even below $110 is probably likely. Such a drop would provide an even better entry point for buy and hold investors in this healthcare fund. Once again, Healthcare Select Sector Spider Fund, symbol XLV. They get you P.A.I.D. When we come back, additional positions in the healthcare sector arena that will get you P.A.I.D. as you prepare intelligently for the next pandemic that will hit the shores of the U.S. of A.